this is Stuart Elliott. I'm the editor-in-chief of The Real Deal. I'm sitting here today with Jonathan Miller, the head of Miller Samuel Appraisers. Jonathan puts out some of the most followed reports about what's happening in the real estate market. Welcome, Jonathan.
Great to be here, Stuart.
So we wanted to get people up to date on what's happening across the country, in these crazy times. Let's start with, the biggest market. What are you seeing in New York City, Jonathan?
Well, New York City, there's been a tremendous amount of urban to suburban activity. It's sort of been stereotyped that way, but it really was Manhattan to suburban and the suburbia and the outer boroughs. Manhattan has been the laggard across the region. Activity's up, prices are up, inventory's way down, except for Manhattan. Manhattan has been sort of the tortoise in the tortoise and the hare race, and is very slow, but is gaining steam. And I think the fourth quarter numbers are going to show additional strength.
Mm-hmm. A lot of people, obviously, in New York and elsewhere heading down to South Florida. What are you seeing in the market down there, and primarily in Palm Beach and Miami?
Well, so Palm Beach probably is has become known as the one of the most expensive and robust high-end housing markets in the country. Last year there were 3 sales straddling $100 million. This year, tremendous amount of activity and a real dearth of supply. In many ways, New Yorkers are the foreign buyers of the Palm Beach real estate market. It really stands out. We cover Element's footprint down there is something like 14 different housing markets, and Palm Beach has been one of the steadiest in terms of growth and price trends. Miami, which is a very different market, primarily condominiums and a lot of new development, has also seen, since the end of the lockdown in Florida, a tremendous surge in activity. In our contract reports that we cover in Florida, 3 counties from Palm Beach down to Miami-Dade, and then on the Gulf Coast with St. Pete and Tampa, we've been seeing activity right after the lockdown, levels that are double. And in many ways, Florida is seeing, I think the federal salt tax that came into effect in early 2018, many in Florida were saying, when is this onslaught from the Northeast and high tax locations going to occur? And it sort of did, but after the lockdown, I think it was the sort of final straw, and really those markets are really moving.
Yeah, it seems like it's a long-term trend. How about on the West Coast? What are you seeing in the LA market?
So LA and LA County, despite the wildfires and all that, action this past summer and fall, tremendous amount of activity, both in single family and contract. We're also seeing upward price pressure. It's quite amazing. And I think, and we're even covering Orange County and San Diego County in our contract series, and they're showing the same thing. And the idea here is that after the lockdown ended, there was a flight to the sort of single family market. The single family market boomed. But just like in Florida, we're seeing the condo market in terms of contract activity start to catch up, and now their growth rate is about the same. So I think the pandemic, people were concerned, wanted single family, but multifamily, as people get more information to process, and now we have vaccines on the way, we're seeing a surge. So the growth rates are somewhat similar for single family and condos in SoCal.
And lastly, just about the national market, are you seeing what's happening in the national market jibe with what's happening in the big cities? Obviously, you're always dealing with a lower price point, and lower average prices. What's kind of happening there, if you look really broadly?
Well, I think, when you look at it nationally, and the market is dominated by single family transactions, and there has not been in sort of modern recorded history such a chronic lack of inventory. A lot of the new construction nationally was skewed towards luxury, just like we saw in New York City Metro and other large cities. Same thing in suburban, with new home building. New home building is way off, and as a result, we're seeing a tremendous drop in affordability, even with a record low rates below a three handle, is quite astounding.
Right.
And we're also seeing tremendous price growth. So all the numbers look like they're, it's going to be more of the same in 2021. I'm just not sure
Right.
how long with lowering affordability that will be maintained.
Well, going into the pandemic, we might not have expected that much strength. So it's interesting. We'll see what happens. And thanks, Jonathan. I think that we covered a lot in 5 minutes. Thank you so much.
You bet.